Now, the big problem with cryptocurrency is it's a do-it-yourself type of industry. So you don't have a financial advisor to tell you what's good and what's not. And you're kind of making your own decisions. And where I see a lot of people go wrong is they tend to get caught up in a lot of the hype. And, when things are going up, they're buying it. When things are plummeting down, they're selling really quickly. And it's a bad way to invest your cryptocurrency because you're buying high and selling low at a loss. Now, these 5 key steps are good for any beginner in value investing, and it's guaranteed to provide some good results over this period of time. So the first thing to do is the most simple, proven method of investing, which is dollar cost averaging. And that's simply picking, an amount of money that you'll invest every week. Say it's $20, $50, $100, $1,000, whatever that is. Every single week, no matter what time it is, you are going to put in your money into an investment. And essentially what that does is it averages out the dollar average cost of the purchase. So sometimes it'll be up, sometimes it'll be down, and then it'll average out, the total buy cost of that asset. And it's a simple, stress-free way to invest in anything that you invest in, especially cryptocurrency, because it fluctuates so much. Now, the second important rule is to have a long-term view on your investments. So what I like to tell people is any money that you put in, have a 12-month view on that investment. So it doesn't matter what happens in that period of time, you will hang on to that investment for at least 12 months, then you'll reset, review, and determine if, 1, you still want to be involved in that investment, and 2, should you skim some profits off or move to something else. The third rule is to have high conviction, projects or investments. So you keep it to at least 6. And these are the ones where if the price dips significantly, that's when you put even more money in. Or no matter what, you're always adding to these investments. You can have more than that, but add smaller portions, say, 1% of your portfolio to it. It's important to keep 6 key things that that you understand, and that you can see the potential of it growing and becoming something significant in the world. And if you kept to this focus, then out of those 6, you're going to get one right. 4 is finding the right information sources. It's not enough to, I guess, even hear from me or any other YouTuber. You need to find some information sources where you can get some solid information on what it is that you're investing. One thing that I could recommend is tokenmetrics.com. They do a lot of deep diving about cryptocurrencies especially, and you can get a real understanding of the projects that you are investing in, the use cases, and where the potential is for the future. So that's a recommended information source from myself anyway. And the final thing to avoid getting wrecked in the cryptocurrency market is to manage yourself in the hype. So when things are going good, YouTube is going off saying, it's a bull run, it's to 100,000, 200,000, 300,000, and it can get you really hyped up, and it can even get you to throw in more money. And then, next day, the whole market swings the other way. It's an industry where, things can happen fast. So it's easy to get hyped up. It's easy to buy into the hype, but it's important to restrain yourself from overreacting and overcommitting yourself to something. If you stick with your dollar cost averaging, your 12-month rule, your conviction projects, and you have the right information sources, it can help manage yourself with not buying into the hype of everything that's going on. When it's down, you still keep investing. When it's up, you still keep investing in a nice, disciplined way, and it keeps you settled. It keeps you on a plan, and it stops you from falling into somebody else's plan. Another way to get a better understanding of this is to study some technical analysis, and that's with the charts. Now, again, you could look at it in the short term, but it's best to understand technical analysis in what's happening in the long term. So the big key piece of information that is useful is the trend is your friend. So if you look at it from a longer term perspective. So if things have been on a downtrend for 3 months, then it's likely things will keep declining. So maybe you want to up your dollar cost averaging that little bit more while things are on a decline, as well as if things are on a bull run. And there's the trend is your friend where it's always going up, you could probably put less money in, but make the decision to maybe skim some profits off the table as it's going up to, secure the secure the investment and then have it as an investment success. Now, if you just follow these 5 key rules, no doubt in 2 to 3 years, you would have made 6 figures, depending on what you're investing in and I guess the research that you've done. It's the best way not to get wrecked in crypto, to keep a level head and make some money. So if you think there's anything else that a newbie should know, just comment it down below. But these are the 5 things that I think will be helpful.